Sanibonani, Dumelang, good evening, and welcome to episode 300 and host Zama Khumalo. It's the Friday edition of the Private Property Podcast of Journals for the first time. Welcome to the family. You're tuned into the only daily property show in South Africa, catering to your property needs. Doesn't matter where you are on the property journey, whether you're looking to buy, to sell, to build, you're a tenant or you're a landlord, we're certainly here to make sure that we hold your hand and help you make better informed property decisions. And to all our regular viewers on Facebook, on Instagram, on YouTube, and to those of you, of course, who listen to us on Spotify, Apple Podcasts, or wherever you get your podcast, welcome to it. You know how we do. Every single weekday, you and I have an appointment at 7 p.m. where I'm always in conversation with a property expert who helps us make better property decisions. And of course, one of the great things that we love doing is make sure that we make the property circle bigger, share in each other's advice and some of the things that we have picked up on. And that's exactly why we're running an incredible competition on our Facebook page, where we want to find out from you some of the great property advice that you have picked up while watching the show. And of course, if you share with us on that pin post on our Facebook page, then you stand a chance of walking away with 500 rands in cash every single weekday right here on the podcast. And of course, if we do call your name, then all you have to do to walk away with that cash prize is to drop us a message to claim your prize. And if you don't, then the money rolls over in the money bag for the following day. We're currently sitting at 3,500 rands in the money bag. It's a big number, and I do hope that whoever wins is in indeed watching us this evening and can claim their prize. Now, of course, the other thing that you can look forward to across Private Properties social media pages are the other great shows that you can tune into every single weekday at 8 p.m. It's a Friday, and Chad brings you the Home Shoppers Show, where he takes you through exquisite properties that you can find on www.privateproperty.co.za, and that comes to your screens every Monday at the same time. And on Tuesdays and Thursdays, Mbali Noko brings you the Farming Podcast, tackling all things agriculture. And on Wednesdays, Esther Clarkson takes us through the First Time Home Buyers Show. Well, those are some of the great programs that you can look forward to every single weekday at 8 p.m. right here across Private Properties social media pages. Do make sure that you follow us across different social media platforms from TikTok, Facebook, Instagram, Twitter, LinkedIn, YouTube. We're certainly there. You can follow myself at Zama_K on Instagram as well as on Twitter. And this evening we're looking at a topic that, and I know many people who are used to watching the show have heard me speaking about this, and I'll share my story a bit later on. We're looking at the hidden costs of home buying. A lot of us, when we buy a property for the first time, there are certain costs that we're not aware of, unfortunately. And the reality of not being aware of certain costs is that they can put you in quite a difficult position. And we want to make sure that we, make you aware of the different associated costs of buying a home, and that you're best prepared to meet all those financial obligations. And to help us get a sense of what these costs are and around about how much we should be budgeting for those respective costs, I'm joined this evening by Tania Fourie, who's a real estate broker. Tania, good evening, and thank you so much for joining us on the show.
Hi, Zama. Thank you so much. Nice to be here.
It's such a pleasure to have you with us, Tania. When we look at home buying, we know that there's so many associated costs. I think firstly, just at the top, when we look at how much money we should typically look at saving broadly, right? When we're buying a property, how should we be looking at the costs associated with acquiring a property? Because I think with some of the things, we sometimes think, look, it's just the purchase price, maybe one attorney or whatever the case is. How can we almost best financially prepare our minds for the massive price tag that comes with buying a property, and that it isn't just one line item that you effectively have to budget for?
Yeah, look, Zama, I think especially when buying a property, like you said now, you walk into a property, it's very emotional. So the emotion takes over, and a person sometimes forget about what's in the background. So I think when you're looking at buying a property, any client, a new home buyer or a secondary home buyer, you would need to look at costs. The most general one is the bond and the transfer fee cost that you would need to have available. So meaning that is something that you cannot buy without. Some of the banks at the moment, they do actually supply the facility, depending on your credit history, if it's good or not, that they actually do give you like 107% bond, but up to 1.8 million rand, you can get costs included, but it just depends on your credibility as well. So you have bond and transfer fees involved. So just to give you a rough idea, let's take a figure. Let's say I'm taking just over 1 million, so about 1,020,000. If you're buying for that, you need to be prepared for about 50,000, say about 51,000 bond and transfer fees combined, to give you an idea on savings. So that's more or less what you would look at. You would also, if you want to look at a higher price bracket, the best way of doing it is most of the banks has a bond calculator available to you as well, which you can just go in and just calculate basically what is the bond and transfer fees. It will come up as a unit or a combined amount, so that you can also see how much you would need to put away.
And I see you're already getting some love on our Facebook page with different viewers watching in and marking the registry. Michelle Bolmeran sending those green hearts. To Mayekiso Kuto Ramkhale sending those green hearts. Do you continue sending them through? Absolutely love hearing from you. And I also want to find out from you at home, if you've bought a property before, what was a cost that was associated with home buying that you were not aware of, that you ended up obviously having to pay for? So what cost caught you by surprise when you were buying your property? Many of you at home know my story of, not budgeting for bond registration attorneys, and of course, being met with 2 invoices that I had not budgeted for, but luckily I was able to honor and pay for. But and we also just know the danger, and I want us to talk about that, Tania, the danger of taking on extra credit during that process where you're buying a property and the bond is already granted, your home loan facility, and of course the property's in the process of being transferred, only for you to find that there's a cost you didn't budget for, and then you want to go either take a personal loan or you want to call your bank for them to increase your credit facility. What are some of the dangers of people doing that? Because I've seen people do that, and sometimes banks end up withdrawing the bond grant that they had given them because effectively their financial situation has changed.
Yeah, look, I think that is very important. I think as a buyer, you need to educate yourself before you're buying, because you also can't say, I didn't know. But I think one of the biggest things is the banks are very much interlinked. So you as a buyer must understand that if you, for example, I'll talk about it in 2 ways. Firstly, let's say you buy the property, everything's 100%, your bond is granted, and you decide tomorrow, okay, great, I've got the house, I'm now going out and I'm going to go and buy a car, for example. Now, it's happened with clients before where what they've done is now they've got car credit, which initially they didn't have when they applied for the bond, where banks have actually just before, or when a client has actually been in a property already, they've moved in, withdrawn that bond because now they've got additional credit onto their name, which wasn't initially there. So that's the first thing. And then also when clients are buying, they've got to look at hidden costs. And one of the things that we're finding is coming up a lot at the moment is where clients, they don't know that they have to open their utilities with council. And they've got to pay a certain amount up front to have those utilities opened or the account opened. And you're looking anything, it could vary anything. It's not a set rate, it's a specific rate on area or complexes. For example, you could look anything between 1,000 to 4,000 Rand to open that account. And that is what people are often missing, especially when it's coming to buying a property as well.
We are taking your questions and comments this evening on the Private Property Podcast with myself, Zama Khumalo, in conversation with Tania Fourie, a real estate broker, looking at the hidden costs of home buying. And I find out from you at home if there was any cost that caught you by surprise during your home buying, stage, and when you were buying a property, maybe a cost that you didn't budget for, or a cost that you absolutely didn't know about. We've got Mkata saying bond transfer costs are a pain, and that's quite a huge pain, and it's a pain that you absolutely cannot. You almost, there's no way you can avoid that one. I think when we think of all the other costs where you could potentially avoid a cost, that's one that you absolutely cannot avoid at all. We've got Michelle Gomaran saying, I don't own property, but this will definitely be helpful in the future, fam. Absolutely love that, Michelle. I think already equipping yourself with the right knowledge and insight, and for you to be able to be, best prepared when it's time for you to buy that property. Now, Tania, I think let's look at one, and after the break, we'll look at, some more costs, but what's one cost that, viewers at home or just generally clients you found, especially first-time home buyers, tend to not know about, tend to not know to budget for when it comes to their home buying journey?
Look, I think what is general maintenance on a property. I think that's one of the biggest things, because again, you're excited about the home, you've got your bond and transfer fees, you've got everything ready, and you're ready to move in. And when you go through a property, is really just to screen through it and make sure. Maybe take a friend or a family member with you. I always say 4 eyes or 6 eyes is better than 2. Is maintenance on a property. That is something that you've got to budget for, something that as a homeowner you can't transfer to someone else. And you also need to make sure what that is and what that involves.
Mm-hmm. And I think that's just such a big one. Taking more questions, comments from viewers at home, coming back saying, I'm traumatized by the thought of transfer bond costs. We need compulsory Black Friday specials on those costs. Listen, that's the Black Friday special that I'm absolutely here for. I think if banks can give us a 50% at least, like minimum 50%, anything less than 50%, we actually have to be honest, is not a Black Friday special. That's just your normal month-end special. Don't tell us about 10% to 20%. Give us 50% plus, and then we'll consider that a Black Friday special. I want us to go for a quick break and see who the lucky winner of that 3,500 rands that is in the money bag is this evening. When we come back, we'll be looking at more costs that you need to be budgeting for at home, especially if you are going to be buying a home and want to make sure that you are best prepared and best saved up for those associated costs. But in the meantime, let's see who the lucky winner this evening is in our competition. And the lucky winner of the 3,500 rands this evening is Noninkuta. Noninkuta, congratulations to you. You stand a chance of walking away with that 3,500 rands. I hope that you are watching and, of course, can claim that prize. So, Noninkuta, you've got until the end of the show to raise your hand and claim that prize. Going back to our conversation with Tania Fourie, a real estate broker, looking at the hidden costs of home buying and taking your questions and comments at home. We've got a comment coming through from Tiatu Munyai saying to reduce most of this cost is to buy from a seller who is registered with VAT. And let's explore that, Tanya. I mean, what are the perks of or the advantages of buying from a VAT registered vendor when it comes to reducing some of these or potentially reducing some of these costs?
Look, you can obviously then claim those costs back, from SARS, which is good. But initially, it can bring then your bond and transfer fees. It can bring it down, which is great. So it is a good option. I can tell you that very seldom people are doing that at the moment because most of our home buyers are buying in their own names as their main residence. So very seldom are we seeing that at the moment, but it is definitely a good way of buying a property because you can save a lot of costs or reclaim some of the costs, and that's important.
And now, Tania, what are some of the other costs that viewers at home tend to then forget during that home buying process that catches them off guard? That we really need to make sure that if 2022 we have property goals as one of our goals, we are saving up sufficiently in order for us to be able to meet those financial obligations.
Yeah. So just, also important when you're buying, you must know when the bank gives you a bond, the bank will insist in homeowners insurance on that building. So it's just any structural damage that happens to that property, you will have to take out homeowners insurance. You do not necessarily have to take it out with the bank. You can outsource it to other, insurance companies as well, and then see who comes up with the best rate. And I'll encourage you to do that, because people, I think, just normally just go with a bank, but there is other options out there, and that's something that our clients never take in consideration because it's just normally structured in, or they see it when they go to sign the documents and they go, what insurance is this? So just keep your eyes open regarding that.
And when we then look at, saving as much as possible, Tania, when it comes to these, some of these costs, what are some of the best ways to try and bring those costs down? Because I think we know that there's certain costs we can negotiate down. What are some of the costs that we can negotiate down and others that there's almost no way you can negotiate down? Whatever the rate you get quoted, it's very likely going to be the rate that you have to pay.
Yeah, look, as you've just mentioned, Zama, as well, I mean, bond and transfer fees, I think we all feel the same about bond and transfer fees. So I was very excited when someone mentioned Black Friday on that. I'm in. But also, your rates when it comes to the bank, the lending rate, it depends on you as a client. So I'll encourage any new home buyer, do not just approach your own bank, because yes, it's not something that you've got control over, but what you do have control over is you can approach or have someone like a bond originator, for example, approach all the banks for you and then come back with the best options for you, where each bank will give you a rate according to your credit score and obviously your history, and then you'll go with the best bank that gives you the best deal, even if it means you've got to move your portfolio. A 0.5 or 1% is worth doing that than having one option on the table, and that's very important.
I think a rate difference. You think it's small if it's even a 0.25, but when you actually look at it throughout the loan term, you realize just how much of a difference it fundamentally is. I recently had one of the home loans, reviewed, the rate reviewed, and was able to get 1% reduction in the rate, and that's quite a huge reduction, I think, when you look at the loan term. And I think now also when we look at the fact that interest rates have gone up, the repo rate went up by 25 basis points, and so we are paying more than what we would have been paying last month, for instance. So all these little costs certainly do stack up, and there is a difference. So you want to make sure that you save up as much as you can, wherever you can, when it comes to your home ownership journey. Now, Tania, I want us to look at another cost that perhaps people still get caught off guard, and that is the deposit, because I think there's still different schools of thought when it comes to deposits. We know that oftentimes at first-time home buyers, banks will or certainly can extend 100% LTV towards you and when you're buying a home. And so sometimes people think they don't have to save up for a deposit or have that deposit on hand. Well, what are some of the perks of having the deposit, even when you know that you will very likely get 100% LTV?
Okay, so I think also one of two things. If you're putting down a deposit, a good deposit, when you are securing your offer, when buying the property, it shows very good intent to the seller. Number one, that you're serious on buying that property, and it could also, be the make or break between you and another client. For example, if there's more than one client, bidding on the property. So that's the first thing. The second thing also is when you're putting down a deposit, when you're buying the property, again, the bank looks at it in a very positive way, and it also will bring your repayments down on a monthly basis. So I'll always encourage people, if you can, put down the deposit. You're going to pay less on your bond, over a 20-year period, and that's that. You can't buy that. And normally it's better to do that, because you might up spending that money on something that is irrelevant, where you could have put it in the bond initially. So if you do have a deposit, put it down, especially when it comes to negotiating on buying a property at a good price, firstly, and then secondly, also it will bring your bond repayments down when you're putting down a deposit on buying a property as well.
And that's just such an important one. I think having that amount certainly does give you a bit of leg room to negotiate certain things, even with the bank, negotiating with the interest rate when they see that, okay, this person has a substantial deposit that they're willing to put down. It does help you when it comes to negotiating that interest rate. I am, of course, in conversation with Tania Fourie, who's a real estate broker, as we look at the hidden costs of home buying this evening. And of course, as you know, we are running that great competition on our Facebook page, on the pinned post on our Facebook page. We're going to find out from you some of the great property advice that you have picked up while watching the show. We're still waiting for the potential lucky winner of this evening's draw, Unoni Kota, to raise their hand if they're watching, to claim their prize. 3,500 rands up for grabs. If they don't, we're going to have a rollover into Monday, and of course it's going to go to 4,000 rands. I want to read some of the great entries that some of you at home had sent through when entering this competition. We've got Paulina Nkosi saying, I learned the importance of living a will in case you pass away, so that your beneficiaries will not lose any of your properties to the government. Buhle Maduna saying, I also love the finance live shows on how to look at it when it comes to the property. I actually learn a lot in almost all of the shows. We are definitely at school. Absolutely love that. And then Ukyu Genuka saying, I've learned the importance of maintaining a good credit score and a lot of other lessons. And I actually want to touch on that, Tania, the credit score and the costs that you can potentially have lower or certainly higher based on your credit score, because we talk a lot about the importance of maintaining a good credit score and how it affects your ability to access a home loan facility in particular. But we also, of course, know that when it's good or when it's bad, you can sometimes pay more or less on a property. Let's just look at what having a good or a bad credit score, how that fundamentally affects some of the costs that you may encounter when you're buying a house.
I think it comes down to one thing, and that is how you manage your accounts, because that's what the banks look at. It doesn't matter. You can earn an exceptionally good salary or exceptionally good income, but if you manage your income incorrectly, meaning you paying your accounts late, or your debit orders, maybe you didn't have money in that account at that time, not necessarily that you don't have the money, but you're not managing it correctly, the bank sees you as a risk. So they will not consider you for a 100% loan, or let's say 107% loan, because they look at how you manage your accounts. Because if you manage your accounts badly, why would they want to give you credit? Because you've got to be paying that home loan back. So it's exceptionally important that you manage it, very well. We've seen often if clients are looking for a bond and it's between getting 95 or 100% bond, they really look at how you manage your finances, and that could make or break it in the end.
More of your questions and comments this evening as we continue our conversation coming through on our Facebook page. Sebo Mukhubudi saying, when going to view a property, always insist on seeing the rate statement and the levy statement more often. Don't show the rates on the listings. And Tania, I'll pose that one to you. Why do we sometimes see, some listings have the rates amount and others simply?
Look, I think it just boils down to, you've got to be transparent, good or bad. The client needs to know exactly what's going on. It could be that maybe the levies is too high, so, they don't want to put it on, or the agent is maybe not putting it on because they don't know. That could be. But I agree with your listeners. You have to, in this day and age, the real estate professional needs to give you a copy. They don't need to, obviously, without the owner's details on, because you're not allowed to do that, but you can get a copy of the rates account, levy accounts, and especially rules and regulations as well, because you might have 3 pets and those are your babies or your children, and you're moving into the complex and they're not allowed to come into that complex. So I do agree, it's very important that you see that you can see what is what's related on marketing, and what you're going to be signing is 100% on the dot, so that you're not surprised with a 5,000 rand bill and it was said that it's 2,000 rand.
And I think that's a very big one. I think that's the cost that we don't sometimes think of, the levies and the rates, because we're busy budgeting for all the other things and making sure that we have to be paying for once we have that property. And the reality of that is it can easily eat into your actual money, to a point where you may not actually have those funds. I think sometimes some levies can go up to even 4,000 or 5,000 for a simple cluster. And if you had only budgeted, let's say, up to 2,000 at most, having that amount being double certainly is not going to go down with you and your budget going forward. Tania, as we wrap up our conversation, the answers during that home buying stage and how to best prepare themselves, especially for those at home who likely have as one of the goals for the new year.
Yeah, look, I think it's just to be ask lots of questions, make sure that the person that you're dealing with You get all the information regarding the property that you're purchasing from a costing perspective. And then also saving as much as what you can, but makes a massive difference when it comes to the interest that you're paying on your bond over that 20 years. And you can shave off a lot of time off that bond actually, but